Foreclosure filings in all 50 states of America have gone up 39%, and the Fed has recently just told us to get ready for a recession coming in 2023. Now, these aren't my words. This is not my opinion. This is what's really going on. So the amount of foreclosure filings that we're seeing are the largest that we've seen in the last 2 years, which is in correlation with a lot of other things we're seeing in the last 2 years that have gone crazy, right? The cost of housing, higher than ever seen in the last 2 years. The mortgage rates, higher than we've ever seen in the last 2 years. And now having foreclosure rates that we haven't seen in the past 2 years. What does all this mean? Well, it means that things are finally coming back to normal. All of the foreclosure moratoriums have been lifted across the country, and now it's finally time for people to pay the piper. Now, the states that are seeing the largest amount of uptick in foreclosure filings are California, Florida, Texas, Illinois, and Ohio. And to break it down even further, the cities that seen the most foreclosure filings are in Chicago, New York, Los Angeles, Houston, and Philadelphia. And right now, the predictions are that the foreclosure filings will continue to increase throughout the rest of the year. So I know this is a bad thing for people who are losing their homes right now, of course, but it is good news for the housing market that there will be some new inventory coming to market. And this is just one piece of the puzzle, guys. Because Fannie Mae came out and basically said that there is most likely going to be a recession coming in 2023, what does this do? Well, look what happened when they said they were going to raise the federal rate by a quarter point. And they did it. And before they even did it, the mortgage rates started going up through the roof to where they are now, hovering near 6% for a 30-year fix. Now that they've made this announcement that there's probably going to be a recession coming up, that can kind of throw us into a recession just by them saying that it's going to happen. Why? Because people prepare for it. Businesses and consumers will maybe now be expecting a recession. Because that is the case, we might see businesses laying off people. We might see companies that aren't doing so well right now shut their doors, and everybody thinks that this crazy housing market's gonna go forever because of supply and demand. Well, you know what's gonna be the easiest way to get more supply to the market? These foreclosure filings. And guess what? The more people lose their jobs and companies close their doors and the stock market starts taking a hit like it already has been, then the worse things are going to get from the perspective of people being able to afford their homes, especially for anybody who bought within the last year who's paying a much higher mortgage interest rate and they have record high mortgage payments, and say that person loses their job. How long do you think they're really going to be able to hold on for? Prior to the pandemic and even up until now, the narrative was that like half the country is living paycheck to paycheck. Now, I'm not saying all these people that own homes or bought recently are the ones living paycheck to paycheck, but you'd be surprised, people that work normal jobs and have to work every single week to afford their house payment, they might not have as much of a safety net as they might need to be able to make it through economically hard times. So that is the concern here. So we're already seeing the foreclosure filings go up and the Fed's calling for a recession. The National Association of Realtors even predicts that there's going to be a 10% decrease in home sales here in 2022, which we're already starting to see now coming into April of this year, that the amount of closed sales is starting to go down, and these higher mortgage interest rates are starting to have an impact on the market from an affordability standpoint and from a qualification standpoint. Less people can afford more expensive homes, which is going to lead to a slowdown in the housing market. Now, ironically enough, the Fed actually is saying that the housing market, because it's doing so well, prices are so high and demand is so high and supply is so low, that it's actually going to help cushion the economy from the recession. Although I don't see that being the case, because if the housing market's doing so well, it's only because everything is artificial right now. We have an artificially high amount of money into the system that we've never seen before, right? There's jobs anywhere people can go and get one right now, and that has been the case now for the past couple of years. But what happens when a recession does come and like I said, companies start closing their doors, people start getting laid off, how long can those people hang on for and basically keep affording their high housing payment before they just can't do it anymore? Or if the housing market does start taking a downturn and people who bought at these record high prices, even if they can still afford their home, if for some reason they need to get out of it, well, guess what? Now they're going to be in a short sale situation. So it could start looking a lot like it did back in the 2008 and 2009 housing market, where there were a lot of foreclosures and a lot of short sales. That's how it was here in the Miami area where I have worked as a real estate agent. That was common back then. Literally half of the listings you would see online were either a foreclosure or a short sale, and that was just normal. And if there is a recession, that could end up being the case again. And one of the strongest arguments I hear against this is, Michael, this is not like 2008. We have stronger lending standards and there's not enough housing to go around. The demand is too high and the supply is too low. But everything I just said is pointing to more inventory coming back to the market sooner than you might think. But hear me out. I don't think that the price of housing is going to drop by 50% or something crazy like a lot of people are calling for. Do I think there will be a correction in prices? Yes, I do. I don't think it's going to be 50%, maybe 10 to 25% depending on your market. Really, that's probably going to be it. And that's just a guess, this is just an estimate. The stronger markets are not going to be hit so hard economically. Maybe they'll see a 10% decline. Places that see a harder economic hit from the recession, maybe they'll see a 20 to 25% price reduction. So overall, that would be good for buyers as well. And a lot of people are always saying, people have these ultra low interest rates, I'm never going to sell. But guess what? Sometimes people are forced to sell in a recessionary period because of the things I already mentioned. And often that's the issue with the housing market. While it can be a great investment, there's often a lack of transparency, leaving people wondering if it's the best place to put their money right now. Which led me to Masterworks, the sponsor of today's video. Masterworks is the investment platform that allows everyday people like you and me the chance to invest in contemporary art legends like Picasso and Banksy. The art research experts at Masterworks leverage millions of data points to find financially attractive works of art that they believe will appreciate in value. And let me tell you, they know what they're doing when it comes to selling art. In fact, the 3 paintings they sold so far have made investors a 30% return on investment. Legally, I do have to add that past performance is no guarantee of future results. Signing up is super easy and totally free. They're growing so fast there's a waiting list to sign up, but you all get priority access to skip the waiting list by using the link in the description below. And here's the biggest cautionary tale of all, guys. Remember when the Fed said that there is no inflation, or once they finally admitted that there was inflation, that it's transitory? Well, then they quickly reversed that a month or two later and admitted the inflation rate, which was like 6-7% then. Now they've already said it's over 8. So you can't believe what these guys say. They're predicting a modest recession is literally the quote. I will put it up on the screen. You can see. They predict a modest recession. Well, they predicted that inflation was going to be transitory. So this upcoming recession could potentially be a lot worse than they're saying it's going to be. They probably don't want to ruffle a lot of feathers and get people scared, but they know that the only way to bring our housing market and our economy back to normal is to make things crash, because we cannot keep going in the direction that we are going right now. Otherwise, affordability will be a thing of the past. And literally there won't be anyone left to buy a home besides maybe foreign investors that come in with a bunch of crazy illegal cash. Is that what you want the United States to turn into? I know I certainly don't. And one of the most dangerous things of all right now is I literally see buyers FOMOing into the market because there's people out there saying that the prices are never going to go down, that, this is not a housing bubble, there's just not enough inventory, and this is just going to go on forever. Guys, anybody who's saying that right now probably has some sort of financial motive to tell you that everything is rosy and this is never going to come to an end. Because I certainly don't believe that. I'm a 13-year veteran in the real estate business. I didn't start yesterday, and I make money when people buy or sell a home. And honestly, I don't care if you use me or not, or what the situation is. You know, the goal of my channel has always been to look out for my people and give people helpful advice and answers to questions that they're looking for. And this video is no different. So to me, this is a big warning sign from the Fed and the foreclosures ticking up that things are about to change. In fact, I think it's already changing right in front of our eyes, but the thing is, the housing market moves at such a slow pace, it's kind of hard to see the reaction. You know, it's not like the stock market where you check the ticker and things are down 10 points or 50 points. We have to look at these type of indicators that are basically pointing to the fact that the party is about to be over. Now, if you enjoyed this video and you want to hear more about why I think you should wait out the housing market, then check out this video right over here, and I'll catch you guys over there.